the ad hoc session. So Bridget, I am gonna move pretty fast to get to the good stuff with SR&ED, but this is worth a lot of money. So for everybody here, we're gonna distribute these slides, and there's some worksheets we're gonna use as we go through the presentation today. But in particular, this table of contents is a bit of a directory to help you understand what situation you're in, what programs you should look at, because we've seen the government launch many programs, and almost everything on this list has an interaction with SR&ED as well. So I'm going to add that spin and commentary as we go through. So for businesses on the phone who've maintained employment but seen a revenue decline, we're going to want you to investigate twos and choose, TEWS and CEWS, notable wage subsidies. If you're trying to maintain your workforce and avoid layoffs, you'll want to talk about something called work-share. If you need capital to continue your operations, there's a variety of new and exciting loan and debt operations that are not normal. That's SEBA and BCAP. If you're a startup that can't get funding through SEWS and BCAP, an IRAP IAP program launched yesterday. So there's a hot off the press slide there. Its application deadline is the 29th. So I want to make sure everybody's aware of that. One of the reasons I'm drawing your attention during this regularly scheduled SR&ED program. 29th requires some hustle, I'll say, on your part. And if you're out of work, there is some things I'll go very quickly over EI and CERB. And then finally, we'll talk about the impact on existing funding programs. So that's our first agenda, and we're going to keep going. First up is TEWS. I'm going to move really quickly past this, but say for those who have payroll, you should be working with payroll companies to consider reducing the total amounts that you're paying. It's a very small credit and not your priority today. Good task to delegate. CEWS is a substantial tax credit. So we're talking about a potential value of $847 per week, but it's not an easy one. I want you to understand you have to show a revenue decline. So if the people on the phone are startups that were pre-revenue, we were able to lobby the government and get a change to this program. So you could look at your average revenue, not last year compared to this year as per the original version, but the changes, you can also look at your revenue in January and February of this year, comparing that to March and April and May. So for early stage startups that might have launched and had positive revenue, if you see a decline in revenue using either a year-over-year analysis or comparison with March and January, you could be eligible for a substantial subsidy. And these are the same people you might be paying to do SR&ED work. Remember, this is only applicable for salaried people if your company has a revenue decline. So I want to encourage everybody to look at CEWS. It's a little complex, and we're not going to get into the details here, but sufficient for today is that if you saw a revenue reduction with either of those two comparison timelines I shared in March 15th through April, we can get up to 75% of our salary back as a subsidy. That's capped at $847 a week per person, but that's a ton of money, and it's worth everybody's time to look into CEWS. As you can see, as you progress to period 2, the revenue decline year over year, or comparison with Jan-Feb has to go up to 30% and so on. And so that gets a little bit harder to qualify, but still a notable expansion. We're expecting to see other periods launched before this COVID situation wraps up, but we have 3 today. CEWS applications, there's a live CRA website to estimate it now. It goes, you're able to apply on the 27th. And that's just a few days away, and we're expecting to see cash in your bank account on May 6th. So for those who are struggling with their operations, again, I want to give you a sense of urgency. SR&ED is great. It's not going to move that fast. CEWS will move quickly. So if you're seeing revenue declines, that's a key one for you. If you don't qualify for CEWS because you don't have that revenue decline, you're going to want to look at this newly launched IRAP IAP program. So it was announced on the podium, you know, ministers and president and prime ministers outside of their homes talking about $250 million. The first details came out yesterday officially from the agency administering this program. It's not the same as the old IRAP. This is a wage subsidy for 12 weeks. But where SEWS had a revenue test, IRAP does not. It's going to have different tests. And so, in fact, you have to be ineligible for the CEWS program to even apply. You're going to need to work with advisors at Innovation Factory or people in professional services like me at BDO and my colleague Amanda, who I think is on the line, to help you have a plan, a financial plan to pursue growth and profit that you'll have to show. We understand this is a part of the evaluation. You're also going to have to show that you lack financial resources to sustain your operations because of the COVID downturn. And that's a bit tough because many of you on the phone may be subscription services or pre-revenue, and we're not sure how that's going to work, but we know it's going to start with a cash flow statement. So bear that in mind. We're going to look at one really briefly, because to get this money, you're going to have to show your plans are impacted, your launch is delayed, things like that. Hey, I got my first question.
We did.
Does the plan for growth or profit have to be immediate? I don't think so. I think the premise of the IRAP program is to have a company that has a path to profit. As always, the Industrial Research Assistance Program is concerned with wealth generation and return on investment. If they give you $1 today, they want $15 in wealth over 5 years. That means the dollar you give pays a salary. That's a 1-to-1 match. Then you make sales. So when your sales match that salary you paid out, that's a 1-to-2 match. Everybody with me so far? I'll stop using my hands. It's a little hokey. But we got to get to 1 to 15 if we can with IRAP traditionally. So when they say a growth to profit, I'd assume it's a 5-year horizon, but no one knows these details, or at least I don't have those details for you today. I do think you need a plan. I do think you need a cash flow statement. We're going to look at that. Of course, for everybody on the phone, I think you are tech-based startups. You're developing and commercializing innovative technology, and that's a requirement of this funding program as well. You have to have been incorporated already. So by March 1st, 2020, and have a CRA business number. If you don't have a CRA number, but you are incorporated, you're going to have to go through a bit of a process to access that number. I'd encourage you to start now at mybusinessaccount.cra. Hey, good. I got a live group today. That's awesome.
I love it. This is great.
Especially for an unscheduled agenda item change at the last minute.
Yeah.
What is the impact from COVID? Does a lesser investment climate? I think it could, yeah. If you were planning to raise a round or you had term sheets, I think you should bring those forward. I've worked with many clients that had term sheets that aren't going forward, or purchase orders that didn't proceed. That's very powerful evidence to someone who's evaluating your claims that you have a plan to be profitable. If you can show that you did the work to get a purchase order that's not converting anymore, or a letter of intent that that's unlikely to be fulfilled anymore because your suppliers can't give you materials, I think that's going to show the best intentions for you to run a profitable business, and clearly that's something they're going to look at. We see a pool of $250 million that's going to be spent between, or largely allocated, I think, between now and April 29th. So I want everybody on the call to be in queue. If you, I want you to write a great application, but mostly I want your applications to be in. Does that make sense? So just having applied is a very important milestone to go through. So thanks for that.
Great.
I promised I'd move fast, and we'll get to SR&ED. So WorkShare. Questions. Thank you very much. Maybe I moved too fast. Bridget, let's go back to that last slide, because this is a good program.
Yeah. So somebody mentioned you can't see the questions. Could we please read them out before answering? So we will. Thank you for that. Sorry about that. Okay. So the question before was, with the impact from COVID, does a lesser investment climate constitute for that? So that was the question he had answered.
Yeah, so there's all sorts of ways to measure COVID's impact on your business. So there's also, traditionally with government assistance, you can be something like an indirect exporter. I want to use this example to help you understand how they measure impact. If you're a farmer that grows soybeans that someone else cans and ships, you're an indirect exporter. That makes sense? You're not actually selling directly. You might be selling to another Canadian business, but they're exporting. So there's no problem walking back and forth along your supply chain to try to find a COVID impact. So if your customers are impacted by COVID, and that's affecting how much they're going to purchase from you, or it's going to affect renewals of long-term contracts, even though you don't see a revenue decline now, and that means you can't apply for the CEWS, you're still going to be impacted by COVID-19. It's just not being realized in the time window that we're talking about. So certainly walk back and forward along your supply chain and your value chain. to understand where the impact is and detail that in your application. And certainly, investment climates, I'm going to say that every startup's going to be able to say that, so I'm not sure it's going to be good enough to move you up in a stack ranking. So if all you say is, I was sure I was going to close, and now I'm not going to close a financing round because of COVID, you're going to have to provide some substantiation for that in order to have legitimacy, in my opinion. And so we know that there's stack ranking involved. Applications are grouped into tiers of eligibility. So to be up in that top tier, we generally encourage you to have sample data like a purchase order or term sheet to corroborate your assertions. And if you don't have that, I'd still say try. But just understand that the more third-party data you have to corroborate what you're saying, the better. And the more numbers you can use, the better as well. For example, by working with IF, I'm sure you can get data from local angel groups about the decline in recent investments and things like that. I don't mean to put you on the spot, Bridget and others, but
that's okay.
I think we have the connections to help you. And so participating in sessions like this is where you're going to get access to experts and information that will hopefully help you with succeed in these applications. Really good one. So I'll read the, yeah. So Workshare is an exciting one. I want to say I've had to use this program when I was an entrepreneur. I had a team of about 15 people. Saw a big revenue decline, and I was faced with a tough decision. Do I lay people off and pick the staff I'm going to maintain? And I was uncomfortable with that situation. I worked hard to train these people. And so my decision was to use a Workshare program, which meant everybody in my company in certain groups, let's say development team, design team, sales team, those are different business units, and I gave them each a partial work week. And what that means is they were able to get EI for the days I couldn't pay them, but they could work for me for the days I could pay them. So if we went to a 66% work week, I'd pay them and they'd work for me for 3 days a week, and they'd receive an EI top up for the other 2 days. And as a business owner, I had the flexibility to change that percentage from 10 to 66% in any given week. It's an interesting program, and the requirements to use this have recently declined. It can go on for 76 weeks. So if anybody else is in the difficult position where they're not sure they can maintain staff, consider if you have business units that could move to partial work weeks with the hope that you can bring them back to full-time as soon as you can. I think it'd be a shame to lay people off and not utilize a program like Workshare. It certainly helped me with recovery. Now, again, the benefit here for the business, control your cash outflows. The benefit for your employees is they can maintain some employment and get more money than they could on EI. And of course, everybody hopes we can come back together and be successful at 100% in the future. Yeah. Moving on from Workshare. This is the next one. It is a little bit different. And so thanks for rolling with me. SEBA is an opportunity, again, for almost everybody on the call. So if you're a business that's operating and has paid salaries, that's a T4 salary. So we're going to look at a T4 summary slip. Be over $20,000, but less than $1 million. I suspect most of the people on the call are under $1 million in salaries, but I'm not sure everybody's over 20,000 in salaries. Then you could qualify for a really strange loan. You're going to have to deal with your existing bank to get this loan, and if you don't have a bank, you'll have to work hard to find one who's willing to deal with you right now. It's a $40,000 loan to help you pay for your operating costs in this situation. And so they care a little bit about what you're going to use this money for. You shouldn't be using it to acquire a new business or anything like that. But it's a zero interest loan initially, which is astounding. And if you make the repayments before December 31st, 2020, there'll be a loan forgiveness of 25%. So you're going to take $40,000 now, get on a payment schedule, and then get a negative interest rate effectively. Does that make sense? So if we could take this money and invest it, we'd make money on this deal, but we can't, remember, because the purpose is to use it to cover operating costs of your small business. So please don't leave this call thinking I've told you to go use Wealthsimple and throw 40 grand in an investment account. That's absolutely not the lesson here. But the concept is good. I want you to use this money to build your innovations and drive your sales and be a successful business yourself directly. And so it comes to 5%, by the way, if you can't make the repayment schedule. But I think people have a hard time. This is one of two weird loan situations. So I want to make sure that we can start thinking about what this means on timelines, just so people can begin to appreciate what's actually going on. And so this is an interpretation of that loan on a timeline. And you can see that by taking some liberties here, I want to say as well, you're getting a negative interest rate of something like 10.2% if you can stick to the payment plan. And so the payment plan is that $40,000 divided up in payments between now and December 2022. So if you've never been in debt before, this is an interesting example of learning how to deal with bankers, getting familiar with bank covenants, dealing with bankers to access lines of credit, and in this case, with a potentially negative interest rate if you can keep to the payments. Does that make sense? So the payments are at $40,000, but the forgiveness comes at the end if you can keep up with the $40,000 payments. And I don't think many of you will ever have the chance to get a negative interest rate again in your lives. This would be the first chance I could if I qualified. So that's atypical. And you can see that even if you can't make those payments and pay off the balance by December 2022, the remarkable thing is the effective interest rate, when it switches to 5% in the following years, is still so remarkably low. It ends up being worth around 2.6% through 2025. And that's pretty amazing. So I'd encourage everybody to look at CEBA. Try to figure out if it's something that makes sense for your business, because you won't get angel investors offering you these terms. I promise. I'm being a bit funny here. But it's a good lesson to say that you need a diversity of funding sources, and sometimes that's the right thing for every business. You need sales, you may need some debt facilities, and you may need some investment. But a combination is likely the right choice. A mix is for every business on this call. And SR&ED, by the way, is that fourth sort of pillar that's going to make your business even more stable. We're going to talk about that in a second. But let me say that if you took a CEBA loan to pay an engineer to do qualifying work, not only are you getting a negative interest rate, but I'm going to show you how that same salary you're paying with this $40,000, we can get a 62% refund on that salary through SR&ED if you're doing the right work in Ontario. And when we combine those two things, the fact that we can claim a $40,000 salary in 2020, get back $25,000, let's say, in 2021, reinvest that, and then get back 62% of the 25 grand again. If you're following the math, it's pretty amazing. So this $40,000 at a negative 10%, we're going to sort of wash through the SR&ED program to generate another $25,000 if, again, it's spent on qualifying activities. And then that $25,000, we can spend it again, and we can get 62% of that $25,000 again in 2021. And so you're starting to see the opportunity that debt opens up when you combine it with tax credits. It's really quite amazing, because now we're at the point where we borrowed $40,000. We generated over $37,000 from SR&ED by spending it on qualifying activities and claiming, and then we're getting a $10,000 forgiveness at the end of December when we stay to our payment schedule. So it's kind of hard not to see how this is a big win for businesses that can manage their finances well. And I'm sorry I'm going a bit longer on this because I'm excited about it. What's different about this loan is it does not require a personal guarantee. And this is another unique opportunity. Traditionally, you know, your car, your house, and your parents' investments are held in trust by banks when you try to get access to debt. And there's no personal guarantees with the CEBA program. So I'm going to encourage everybody to look at that one and consider it as a part of their SR&ED solution. Picking up speed again, BCAP is a much bigger program, much more complex. You can deal with the BDC to get very favorable rates, again, to cover a cash flow shortage related to COVID-19. So you have to have that direct effect of COVID-19. This is a different type of loan. And the effective interest rate here is about 2.8%, but again, it's not normal. And that 2.8% is even misleadingly high because there's no interest payments for 6 months, no principal payments for the first 12 months, So if you think about that, there's no payments at all for the first 6 months. Then it's interest only for another 6 months. And then only 40% of the principal you borrow is spread out over the next 2 years, with up to a one-time balloon payment at the very end. Let's think about that again. It says it's 2.8%, but it's actually no payments for 6 months, interest only for 6 months, then 40% of what you borrowed in principal repayments over 24 months. Now that balloon payment is scary. That's a 60% of your total balance. So if you borrowed 100,000, that's 60,000 plus as a one-time payment at the very end. But you can see how from a cash flow perspective, this is also atypically favorable. And before you think you can all go get $2 million from this program, I want to say that you really need to understand your cash position and understand what they mean by a cash flow shortage. It means you're going to have to produce a worksheet that shows cash outflows, operating expenses, taxes, CapEx, investment, loan repayments, and your inflows, revenues, additional financing that's negative, right? So you want to show a cash deduction. So your inflows, your revenue's going down while you're trying to maintain the cash outflows. So the government's trying to stimulate the economy. They want that cash outflow to stay high, and they're going to give you debt to help maintain it. And the gap you can produce over a 6-month, 2-month, or 5-year period is how much you can borrow. So if we're doing a traditional cash flow statement, we're going to have to see something like this from your CFO that adds up to the total change in cash that is going to amount to the dollars you're going to borrow from the BDC through the Business Credit Availability Program. A little bit harder to get this money than SEBA, but still extremely favorable terms and a good lesson in financial planning and how it matters as your business matures. Thanks for dealing with me.
Oh, that's great.
Employment insurance. If people can't work for you and they're sick, please use the right code. If you do have to lay people off or they're stuck home, caring for children, they're quarantined, self-isolating because of exposure. If you have to put them on EI, use code D illness. Even if they aren't ill, but they're taking care of ill people and they have to stay home because of it, do not use code lack of work or voluntary termination or leave. Use code D for illness. I'll leave it at that. And last, when they are off, they're going to apply for employment insurance or CERB. It's the same website. The government will sort it out in the end and they'll start receiving payments. That's the very short version. We're going to step into SR&ED and tax credits now. I'm going to start with the most relevant news. So this is topical news. This SR&ED program is one of many that the Prime Minister and the head of the CRA have cited multiple times as a mechanism that can get refunds out to Canadian businesses and stimulate the economy. And this is pretty amazing when we see the people who are running the CRA telling us they're prioritizing refunds and expediting processing as much as they can. They're reallocating staff. So we just finished a period where absolutely no review activity happened. Every review staff was reassigned just to process refunds. We saw 900 SR&ED claims approved for processing. We also saw the CRA struggle to actually issue refunds. So their target was to get up to 100 claims per week of checks in the mail. And they're a little behind on that target. So they have this massive backlog of approved claims, but the checks are starting to flow now. And that's really exciting. So if you haven't applied yet, understand you're applying in an atypical climate. And there is still review and due diligence done by the CRA. That is absolutely still happening. Don't confuse the message here. There is a difference in their risk assessment procedures we're going to talk about later, and a difference in their processing timelines. So this is not a license to print money or abuse the program, but it is an acceleration of payouts from the program. And that's exciting for everybody who's considering claiming, because if you had talked to me 2 months ago, I'd say if you're going to file your claim today, you might be waiting 6 to 8 months to get your first refund. And today, I don't think that's going to happen. I think you'll be approved in a much shorter timeline. And we're seeing claims for repeat customers, clients I've worked with for years, being processed in 2 to 4 days now. About half the claims we're filing are getting approved in days, not weeks or months. And that's pretty amazing. Now, I want to say not everyone's getting approved. Keep in mind that the risk assessment algorithms are still running and humans are still looking at claims. But for those who are getting approved, the money's starting to flow. If you're not familiar with SR&ED, this is the very short version we're going to get into later. But the best case, the rate of return in Ontario is 66% of your salary dollars coming back. 4% of that's non-refundable, so the cash refund's 62% for those who are detail-oriented and holding me accountable to the number I quoted earlier. But generally speaking, the expenses in your business are still deductible for income tax purposes, but now they generate this additional 66% income tax credit on salaries. And you can see materials contractors earn a bit less. So we'll spend some more time getting into the details in a subsequent presentation on SR&ED specifically. But I want to say there's also other tax credits out there that we're not covering today. E-commerce credit in Quebec, digital media tax credits, film and television, co-op tax credits. They're all prioritized for processing because they all generate refunds. So this isn't just about a special climate for SR&ED. Even some unique treatments for HST. For those of you who haven't filed your HST returns, consider that as well. Great opportunity to generate cash flow. How you doing, everybody? Show of hands. I'm gonna mention another topic quickly before we move on to SR&ED. It's very relevant. I think I saw some feedback there. Can you help me with that, Bridget?
Let's see.
Oh, I thought something flashed across the screen. Okay, no questions.
Nope, I don't have anything yet. No. I'll let you know.
All right, so this is a word of warning now and an opportunity. Most of the other programs you've heard of have changed. If you were traditionally going to deal with funding organizations to try to develop R&D, you may not have access anymore unless you're specifically mitigating COVID-19 in the short term. And we've seen many of these organizations launch or change their rules. So I want to point out that if anybody on the call could sell to the government a product that mitigates the impact of COVID-19, there's been largely a suspension of procurement rules. They're referring to it as flexibility to support innovation and domestic capacity. And that means the government can buy things from you more quickly than they ever could before. So there's websites from buyandSell.gc.ca and Ontario Together to expedite that procurement. Ontario Together is also looking for funding partnerships to mitigate COVID-19. They have 14,000 applications so far. So the economic development officers in different municipalities are trying to read those as quickly as they can. But a lot of programs have changed. So if you were trying to do business with the Strategic Innovation Fund or the super clusters or the traditional IRAP program, you're not going to get a lot of people returning your calls unless you're focused on COVID response, because the Prime Minister has changed all of these programs' priorities to save lives. So NGen, for example, is picking up 100% of the costs to retool plants to generate things like disinfectants, to produce parts for N95 masks, to build ventilators and respirators. So I've worked with distilleries that are now building hand sanitizers. You know, we have 3 different companies in the area that are now building ventilators. We have multiple 3D printers building N95 respirators. We have special companies treating fabrics. It's been an exotic time, I'll say. And all of those capital investments to pay for overtime staff, working 24 hours a day, or buy new equipment, and even buy supplies, are picked up 100% by a number of these programs. So if you can help or be a part of the solution by optimizing supply chains, you should be talking to these programs urgently right now, but understand if you aren't part of COVID response, it's going to be hard to get them on the phone. I think we'll go fairly quickly through these, but I want to encourage people who are relevant to review these slides if they're involved in COVID response. Many people, mental health things, should be talking to the Digital Tech Supercluster in BC, and ISC, a great funding program, has other testing and challenge programs to develop sensors and mitigate COVID-19 as well as its effects on the people and population. Awesome, thanks everybody. So that was a surprise presentation. We're going to move to SR&ED in just a second. I'm going to stop my screen share while we pivot to a new deck. Bridget, can you cover for me for 30 seconds? I'm going to turn my camera off and I'll be right back. Now's a good time for a human break, coffee, things like that.
Yes, and also a good time, I'd like to put it out there to everybody listening in. If you have suggestions for topics that you'd like covered in the coming weeks and months, please feel free to populate the chat. Alternatively, you can get in touch with us and just let us know. We're really making sure that our offerings are topical, that they're relevant, that they're answering your questions. So we really, really appreciate any feedback that you can provide on any programming, whether what you've attended or what you'd like to attend. So please feel free to use the chat. Before the end of the session, I'd love to hear some of your suggestions or recommendations for some of your pain points, issues you might be dealing with. We've had a number of roundtables with executives and residents, and we are planning many more. So a lot of them have different expertise they can speak to. So your recommendations certainly give us lots of food for thought for how to move forward in these times. So please don't hesitate to give us your suggestions if you have some. And then please feel free for a little bio break. If you need to go take a break, go ahead. He'll be back in a sec.
Thanks, Bridget. I'll be good in about 30 more seconds.
All right, we're good, we're good. There's a lot of information to absorb and digest, so that's okay. In that time, think about your questions, folks, and think about what you'd like to see from us. We got lots of great things planned, but I'm always happy to add some more. Oh, I see one new message. Yes, so Ing had a question if Richard's deck will be shared at some point. So typically facilitators will share their deck or an amended version with us. And we have created a page on our website for resources specific to COVID-19. So that is likely where this will live as we've been populating it with facilitator slide decks when we receive them and any additional one-pagers and links that are useful to you at this time. So please feel free to check out our website and the deck will be there hopefully within 2 to 3 business days. I'll be on Rick to get that to me.
You might know me fairly well. That's a bit dangerous. I'm worried some of my tricks won't work anymore.
I will release the hounds. So yes, Ing, I will make sure Rick gets me the deck.
Thanks very much.
No trouble.
Appreciate everybody's patience while we do this pivot to a different deck. Okay, we're going to talk about SR&ED, and I want to explain that you know, there's a few different steps to this presentation. I'm going to walk you through a standard SR&ED introduction now that covers a few different parts. And then for the second half, I'm going to do a more detailed presentation on how to actually write a good SR&ED claim. It's the same document I use for some internal training in my company. I lead a team of 10 professionals who prepare SR&ED claims in the GTA. You know, we help secure $20 to $40 million a year through this program. And so I want to give you some insights into how we train our own team to write great reports. That's the second half of the presentation. We're going to have another bio break and a switch to a different deck. That third part for CFOs on the line, you might not need to stay on for that last part, but I'll invite you to, Bridget, if that makes sense. I don't mean to kick people off, but it's going to get more into technical writing specifically. We're going to touch on that in this deck, but you know, that's the general premise of what's coming up. And I see a question I want to address.
There you go. Oh, you're on it, Rick.
Yeah, thanks.
I was just going to point it out. Okay, so
or SR&ED claims. Yeah, do you want to read it? Go ahead.
Yeah. So from Sergio, we have a question. So we're going to answer it live. So for SRED claim, what can we do to best track and document what we plan to shred in next claim filing? Recommendation for best practices.
Well, that's definitely going to be in the deck, but I'm going to answer it now to keep your attention. So,
okay, there you go.
The best practice is to first understand what SR&ED is. And we're going to talk about the difference between a company project and an SR&ED project, because in the CRA's mind, they're completely different things. So I'm going to lecture for a second here and use an example to say that a project or SR&ED claims, the first we have to understand the scope and what the words people are using. So the word university is a great example. If you say the word university, depending on who you are and the context you're using it in, it could mean wildly different things. And we have a similar problem with SR&ED. So a university could be buildings, like McMaster University. But it also could be a concept. If a politician's complaining about those university people, they might be talking about the freedom of expression associated with rebel professors who are commenting on social policies. And so that comment about academic freedoms is very different from talking about a physical building, but we'd use the same word in a casual sentence to refer to them. And the danger with documenting SR&ED is you're going to document the wrong thing because your words don't mean the same thing as the CRA. And so by going through this presentation, I'm going to fix that. But that's my cautionary tale to start. You can't assume that you're just going to have more documentation of your business and that's going to take care of SR&ED for you. Unfortunately, there's ways to use your business documents to support an SR&ED claim, but there's some contortion and interpretation required to get there. So it's tricky. But let's start with the general premise that no documentation is worse than some documentation. And the same tools you use to run your business absolutely can be used to track SR&ED. So on a day-to-day basis, as someone who prepares these claims all the time, I use tools like Trello and Jira. I use Git and Bitbucket. I do log analysis, code frequency. We look at pull requests and merges for computer science people on the line. We can adapt all of the systems you're using to track SR&ED specifically, but it requires some planning and intention. So we don't need a new software installed, but to best track it, you have to know what SR&ED is. And the rest of the answer is going to have to be for later today. Good question, though, Sergio. I'm going to try to speak to that again as we go. So SR&ED is a big program. It's a bit messy when we talk about its intentions, but at one point in time, it was specifically to make us more competitive. Canada is a part of a group of 27 countries that share common laws. The definitions used in SR&ED eligibility are very much the same. So I can practice in the UK and Australia and other countries with the expertise I have in Canada because we have shared laws around what type of government subsidies are going to apply to R&D and what won't. A little bit interesting. So there is international competition going on in some countries. And the intention here is to encourage businesses to invest and expand their technical knowledge. It's supported notably separately by both federal and provincial governments. And it's a fairly big program. The numbers are confusing if we look at different years or averages, but it's several $1 billion paid out to over $20,000 businesses. We've seen those go down and up. Good story there in itself. So I want you to understand notably that it was, although it's administered by the Canada Revenue Agency, so everything we write is for the Canada Revenue Agency in an SR&ED return. It's filed with your tax return. And those laws were notably updated in 1986, so this isn't a new program, but it has been updated periodically, officially and unofficially. And so there was an earlier question, someone was looking for changes to the program. I'll talk about that a bit. But the key thing with SR&ED is the CRA says, these are the current administrators of the program, to encourage businesses of all sizes and all sectors to conduct research and development in Canada. So that's the current regulators' take on the intention. And so we can interpret a bit from there. The all sizes is an important emphasis this year, and all sectors as well. Now, in terms of recent changes, I'm going to first talk a little bit about some advice about how to think about SR&ED, and then we'll talk about recent changes. So most of the companies here, I suspect, will be conducting something called experimental development. That's the second half of the name, scientific research and experimental development. So we're leaving the scientific research portion primarily to research facilities. I'm going to say that 5 to 10% of the clients I work with do scientific research. 90 to 95% do experimental development. So first, don't get confused by the terms. When in doubt, focus on experimental development. And we'll work further on that definition But first, you know, SR&ED is in general something that happens when routine engineering or best practices aren't good enough. If you take that as the only takeaway right now of what you're trying to document for SR&ED, you're trying to document when best practices aren't good enough, and your team's going to begin its own experimental development to make it better. So when best practices aren't enough, you're going to start doing analysis and experiments to go beyond the best practices you have access to. You've already Googled for the answer and are going to start doing your own work. So that's a key point in time. We're going to talk about other key things to document. So, you know, sometimes innovation in this sense, if that definition makes sense, is a multi-year project. So you could have an objective that you won't reach for 5 years that you're working towards. So when we think of your documentation, the first thing we're going to document is why best practices aren't good enough. The next is we're going to document the innovation in a long-term context, looking past the horizon of what we would like to achieve. If we can understand the interaction between these two things, between the memory-intensive nature of a DOM parser and you know, size of data streams, then we might be able to do these types of things. So again, a scientific relationship may allow us to achieve a technological advancement in the future. I have a software background, so I'll apologize now to the people on the phone who are mechanical engineers. I'll try to adapt to you too as we go, but I think you can appreciate the analogies pretty well. And if not, call me out on it in the chat and we'll try to do better. So the concept here is your innovation requires looking past the horizon, multi-year concept of what you're trying to achieve. That means you're embracing something. The CRA uses a key term here. This is like the university word, technological uncertainty as an opportunity. Let's parse that for a second. So technological first. Hopefully that's a plain spoken word. You can look that one up in the dictionary, but we're combining technological with uncertainty. So technological, if we take it as the interaction between things that would govern the development of methods and techniques, that's what a technology is. Methods or techniques to accomplish a practical ends. And uncertainty, we're not sure what methods or techniques or interactions are going to help us accomplish this, but you're phrasing it as though it's an opportunity. So many people have said that SR&ED requires failure, and I'm not really comfortable with that. Failure is a lazy person's way to explain something was hard. It means the best practices isn't good enough. We tried and it didn't work, so therefore it's SR&ED. You know, that's okay, a C- grade, if I can say it that way. I'm not trying to tell you that you shouldn't document your failures, but I want you to analyze why they don't work. And you're embracing that ambiguity in your documentation as a long-term R&D project. And so for Sergio, who's asking, how do we document things? This is the answer I'm trying to give you, is it's all in the context of how you see and describe a project, and it's not going to fit into a sprint about a new user feature you're going to deliver in a week. It's just really hard to adapt the CRA's conventions, the guidance I'm giving you here, to agile development on a per week basis. We do it through epics in Jira. We do it through tag associations in Jira and Trello because we can't manage it by dragging things around a Kanban board or moving small tasks on sticky notes to different whiteboards. It's difficult to capture SR&ED at that minute level. We really want a systematic approach to solving these macro big picture problems. We want an SR&ED claim to cover person months or person years, not weeks. Last comment here is that failure is an advancement in itself, a CRA concept. A business can fail to develop a better sort algorithm, but a developer can gain extremely valuable insights into the limitations of that algorithm and the relationships that govern its effectiveness. So failure in this context has to be repositioned as well. It's an advancement in the field of science or technology the CRA cares about. It's a failure for your users in your business. And now you're going to recover 60-some% of the costs associated with that attempt. That makes sense. As a business owner, you tried to advance technology. You got some knowledge that might be patentable. You could write a blog about it, publish a paper if you wanted. You don't have to. I'm not encouraging you to do that, but just conceptually, it's a failure from a business perspective, potentially, but it's also an advancement from a development or engineering association society perspective. Thanks for the lecture, that part. We're going to try to make more progress. Feeling a bit dangerous here quoting people. I don't want to offend anybody. But it comes with that perspective that the quote here is that people are mistaken when they think technology just automatically improves. It does not automatically improve. It only improves with a lot of people who work very hard to make it better. And so I want you to embrace that when you're thinking about SR&ED documentation. You want to be seen by the CRA to be a lot of people working very hard to make technology better. And so embracing the concepts I had on the last slide is important. And in general, I want to talk about automatic improvement because that's another important part of this quote. Automatic improvement, people often confuse technical for technology. And tuning a radio dial is a technical activity. 99.9 is the frequency you need to get a radio station. And so you turn a dial to a certain frequency and then you receive a signal. That's dramatically different from understanding how radio waves propagate or are impeded by walls and trees and hills. So understanding radio wave phenomenon, that's technology. Technical problems are, how do I tune my radio? So there's a prescriptive manual you can give people to tune a dial efficiently. That's a technical problem. And so when people talk about automatic improvement or just adopting other people's libraries or technology, switching to a new material, for example, or downloading a third-party algorithm, that might be a technical problem. And so you might receive something like an automatic improvement. But when we're talking about SR&ED, we're talking about technological advancements. And you'll notice this quote uses that word, technology, not technical. And that's another important lesson from a SR&ED perspective. If we're talking successfully about technology and not technical, we can use this sort of stacked bar graph to understand a progression. And I want to say this is contrived. I have many clients who start at stage 3B and 100% of a project is eligible. But let's go through the contrived example of a business starts with market research. It buys some equipment that it thinks will help fill a market need, applies some internal and external know-how, does some training of its staff on how to use this new equipment or this new software library. They adjust parameters, that technical radio tuning example, to see how they respond. The CRA looks at all of that work as due diligence and part of a business's R&D cycle, but absolutely not part of an SR&ED claim. They believe an SR&ED claim is in a timeline of a business project after due diligence and only in the middle. So they see that at some point an engineer may bring you a technological challenge where they don't understand the phenomenons or how things are working, and they're going to try to write a new algorithm. It doesn't mean they can't progress. Just bear in mind that now they're learning from their progression. And so they're going to start testing new variables or things and generate IP. There's no other way to say it. Again, to be direct, you don't have to have a patent or have a patent. Having a patent doesn't mean you're SR&ED eligible, but you're going to generate intellectual property. Your team will know more than they did before because they've done SR&ED work. And that can be a bit confusing too, because training also helped them know more, but that's considered due diligence. So understand, we're going to walk through another slide to dig into this difference again, but the CRA carries with it this presumption that SR&ED has a due diligence phase that's not eligible and an optimization phase that's not eligible. But somewhere in the middle of those two things might be SR&ED. I can't say they're entirely wrong either. I just think its perspective needs to be adjusted because for my claims, 80–95% of your labor costs fall into that red thing in the middle. Here's another characterization I want to teach you about. When you file SR&ED reports, they're going to be read by the CRA who's trying to determine if you're company A, B, or C, and you want to be company B. In this analysis, possibly company C, but let's walk through it. What we're trying to show here is if you're generating any knowledge that's not easily Googleable. How about that? I know Google doesn't like it when I use that word, but let's think about what's available in the public domain. That's been flattened now. If you might want to think of it, if you don't like the Google search reference, consider university textbooks. Company A has been criticized by a reviewer who read the reports they filed because they felt a lot of the work the company's done is found in university textbooks. So they think the company is not current with the level of public domain, and so they would have to review Company A's claim. Because Company A included work, they're classifying here as red, as Company A doesn't really know what's current in the industry. They're doing training and due diligence, and therefore, at least part of their claim was ineligible. Company B, on the other hand, was able to talk about what's current in the public domain in section 242 of their SREED report and only claim the green work. Because they were able to communicate that in their writing, there's no risk associated with SR&ED claims by Company B because they were clearly going beyond what's in the public domain to try to generate knowledge that's net new to them. Company C, on the other hand, made a great advancement last year. But unfortunately, they didn't really describe that well enough again. So the CRA is holding them accountable because year over year, you can only claim incremental work and advancements. You don't get credit for what you've done in the past. So certain companies have proprietary knowledge, and just because you have proprietary knowledge doesn't mean you qualify for SR&ED. You have to expand or add to it every year. So Company C failed to update their reports year to year. That's another type of risk where the CRA might not approve a claim based on a comparison against public domain. This is a bit of a complicated concept. I'm not sure this graph is the best either. Are there any questions? I'll pause here for a second to say, what do people think about this risk assessment context of being compared to the industry at large or the public domain? No questions. Okay, so I'll move on. I've either put them to, we've either lost them, Bridget, or the rowdy crowd needs another sip of coffee. But let's keep going for a second. It's important. I want to explain that you shouldn't be intimidated by this graph. The CRA embraces a concept called a business context, and case law has also supported this. So you have to make a reasonable attempt to assess what's in the public domain, but the standard a 3-person company is held to is different than the standard a 1,000-person company is held to. This might not seem fair, but the tests that you're going to be subjected to are based on your business context. What was it reasonable to think your company had access to? If you had hired a different developer, would you have gotten the skills you needed? Then you might have had access to that technology. If you'd not documented an effort to search online for a solution first, then you might be criticized for not doing enough due diligence. But if, on the other hand, you're a 3-person company who couldn't find an answer, documented the fact you couldn't find the answer, used competent professionals to do the work, and still didn't succeed, you're probably going to have a claim approved, even though that technology actually was in a PhD synopsis by some Norwegian. Written 12 years ago. Does that make sense? So again, this is the test for public domain. Technically, that PhD is in the public domain, but practically it's not available to you in your business context. And so luckily the CRA has humans involved in this interpretation, and they make a decision for your business context about what's in the public domain. So good question here came in.
Yeah.
Where does support work fit into a claim? It does, and it's coming up. I'm going to ask you to be patient, and bear with me for a second. Another concept I have to convey is because SR&ED projects fit in a field of science or technology, they often are within or overlap a single project. I'll use the example of accounting software quickly, and I promise we're going to get to the supporting activity. If your business project 1 is to build accounting software, you might have a claim that involves XML parsing, so the ways you import and export Excel files. You might have a claim in a rules engine or AI that assesses how much taxes are due. Both of those advancements in XML parsing and artificial intelligence are eligible, but your accounting software is not. And that's because it doesn't fit in an eligible field of science or technology. So when we're looking through documentation, we have to remap to projects in fields of science or technology. And in the case of project 3, we might be talking about changes we made to a UI framework that improves our response to users' interactions. That technology might be used in 2 business products, and it might be tracked in 2 different projects in your internal documentation, but it's the same technology. So we'll claim that time as a single SR&ED project, even though it's in 2 different business projects. And so once we've done this realignment between business projects and features to SR&ED experiments and fields of technology, we end up with something like this. Remember, the CRA only cares about experimental development in a field of science or technology. It doesn't care about your users or your business. It's not like the IRAP program I talked about. They don't care how profitable you are or what people want. They care about technical merit. And so your business projects and your features need to have a somewhat strange mapping to SR&ED experiments. And this is coming back to Sergio's question about documentation. You can document feature 2A all you want, but if you didn't get the experimental context of experiment 1 and how feature 2A is linked to it, you aren't really documenting SR&ED. And that can become a bit tough. So conceptually, you need to know what they're looking for, which is an experiment in a field of science or technology. And if you happen to be defining your projects in that way, that's great. You'll have a one-to-one mapping between business projects or features in SR&ED, but many companies don't. They document business projects from a user's context or a market need. Now, support engineering, here's where it comes in. In most claims, we can include many different types of expenses, and I'm going to jump my screen around a little bit to show you some interesting worksheets from the CRA in this respect. But if I look at the claims I make and break down the types of labor activities that are claimed, about 1/3 is actual experimentation and analysis where someone's engaged in solving the problem. 1/3. And that's kind of amazing because remember, this is a technology-based program. And that's because we also get to claim the people who are doing direct technical supervision of them. We get to claim the technical documentation, not user documentation, but technical documentation of their work. We also get to claim all the support activities. And this is an important concept in the SR&ED program and in the laws. And it kind of breaks down in different ways. Let's say that to do an experiment, we need someone to enter data. Well, all that data entry is being done incrementally because of the SR&ED. It's entirely attributable to the SR&ED work. And so because we have that linkage of incrementally incurred and attributable to SR&ED, we absolutely claim it as a support activity. So sort of the knee bone's connected to the thigh bone, and we keep that logic going and drawing it out as far as we can to claim other support activities. So first, there's a causality linkage to claim support engineering. And second, the CRA has defined activities that qualify for support engineering, including testing and analysis in support of an SR&ED claim. But I want you to think in terms of your work assignments, the sticky notes or the tickets that represent a unit of work. Is that unit of work in support of an experiment? Because remember, if we're going to define an experiment, now in our day-to-day activities and every week when we review the activities are going to happen, we want to tag our activities to say, is this activity directly an experiment? Or is it in support of an experiment? Are we building this component because it's a part of a larger test in our multi-year experimental context? And if so, you need to tag work as supporting an experiment. And again, the breakdown here is typically 1 engineering hour of experimentation and analysis to 2 hours of supporting activity that may or may not be done by engineers. This is how business owners and although it's dangerous and unpopular, even salespeople can be a part of an experimental development project. It's going to be based on the activity linkage. We need to know specifically what they've done because sales activities don't qualify, but data entry might. Does that answer questions about support activities? Feel free to call me out on that or speak up. We're going to switch. I'm going to try to be brave here and jump to an Excel sheet I'm going to review with you now. on supporting activities. Bear with me for a second while we go to a new share.
So Ing said perfect. He said
Perfect. I'll take that. Thank you.
We got another one from Elena. Can we claim ED work performed for another company as a contractor, or if we contract out a work?
Okay, you're pushing me into serious territory here. I'm going to answer your question. It has nothing to do with what's on the screen, so I apologize. Maybe I should stop that for a second here. I want people to pay attention because this is a tough one. Really good question. First, let's assume the people who do the work by default can claim the work. So if you're paying engineers, programmers, and you think you're doing eligible work, let's assume it's by default work you can claim. And then let's talk about reasons why you couldn't. So evaluate your contracts. If you've been contracted to do research and development explicitly, so just to be clear that you're doing experimental development on behalf of another Canadian company, then they may own the rights to your work, but only the work they pay for. So you have to think of, if you have a contract to do experimental development for another Canadian company, how many hours did they buy? You've effectively sold those hours to the other company, and they enjoy the rights to make the claim. Most contracts aren't written for SR&ED, and they don't say, I'm hiring you to do experimental development. And so we have to analyze the nature of the contract. Are you providing a good? If you're giving a good, like I'm going to build you a fast performing website or a better brake or clutch, then it's likely they aren't actually contracting you for experimental development services. You're taking on some risk to meet a performance objective, and your costs might go over. So we look at how much are they paying you? Are they paying you hourly? Did they know they were forcing you to do experimental development in the contract terms, or are they just looking for a performance requirement that you might have been able to meet another way? Because many companies can be under terms of a contract and doing SR&ED and not telling their customers. And their contract is not to do SR&ED work on behalf of their customers. It's to deliver a product or service. So the interpretation there is dangerous, Elena. I'd encourage you to book a one-on-one session with me through Bridget at the IF or other SR&ED professionals to review specific contracts. But this is the best advice I can give you. Do you think you're selling experimental development services to another Canadian company? In that case, you're in trouble. Does that make sense? Or it's dangerous, because the CRA takes it very seriously. They never want one unit of work, 1 hour, claimed by 2 Canadian companies, both using the SR&ED tax credit program. For the people on the line, you should have figured out that if the contract's with a US company, you can largely ignore it. Reasons why you might not be able to ignore it is if it was explicitly a subsidy to do R&D. There's something called assistance, either from a third party or from the government, where they're paying you, just giving you money because they believe in what you're doing. Be careful with donations like that. Anything that can be characterized as not a commercial exchange can also be assistance. But with that exception, worry about your Canadian customers. I'd encourage you to talk about SR&ED in your contract terms. Absolutely, my deck will be sharing for sure. And I think that's it. Have I caught up now with the questions, Bridget? We're doing okay?
Yeah, it looks like we're caught up. Yeah.
Okay. Yep. Just going to do a quick time check here. I think we're doing all right for our timing as well.
Yeah, we've got till noon, but we can save any time at the end for Q&A, and
yeah.
We finish early, there, and that's all good. We'll just flow.
Oh, thanks. Absolutely. So I'm going to share my screen again, a little operator error there. I'm going to walk you through a slightly complex chart, and I want to say this is taken from the CRA's own guidance materials. And we're going to sort of scroll down as best we can through this chart now to help you understand the more advanced version of what's a supporting activity, what's an eligible activity, and what's an ineligible activity. So this is from Table 3 in Guide to SR&ED tax credit claims. And so The green box is good, and I want to walk you through these columns. So if you see an X in the first column, that means you can claim the time. And if you see X's in other columns, it means it's a bit dangerous or careful, and I'll walk you through what that means. We have another question. Bridget, do you want to handle that? Oh, be right back. Sorry, Bridget. So let's think about this column. Now that you've seen the columns, everything that has an X here is typically considered engaged or in support. So if we have people doing experimentation and analysis, and then support by doing engineering, design, operations, research, non-specialized employees performing tasks such as operating machine, feeding raw materials into a machine. Again, draw your software comparatives here. Feeding raw materials into a machine in software is operating a user interface if that's a part of a task you need to do an experiment. Let's keep going. You'll note this shouldn't really be abused. There's a bottom at point 3 around row 23. To be eligible, the non-specialized employee's work has to be supervised by a staff with scientific or technical qualifications. This is where the CRA is starting to put some qualifications or controls in place, because we're not just supposed to spend all time that people spend using interfaces. It's only in support of an experiment or analysis. I'm going to keep scrolling down to say, you can see there's other types of activities that get a little bit exciting that you can claim. Technological planning of ongoing SR&ED claimed in the tax year. So people who are doing work of assignment of technical personnel, prioritization of jobs, that absolutely can be claimed. Feasibility studies that are part of an SR&ED project, not before an SR&ED project, that are part of an SR&ED project eligible. And then you see the technical documentation for internal use here checked as well. I want to point out that we're starting to see now some things being checked in column 2. For most of you on the phone, that means you won't be able to claim these activities. Technically, they can be included in the claim that's called a traditional claim as opposed to a proxy claim. But I'll encourage you to show great caution before thinking you can file a traditional claim. About 0.5% of my application. So if I file 200 claims a year, I might do one traditional claim in those 200. Traditional claim is almost never favorable for software companies or for companies that have high salary costs. But technically, there's another group of activities that can qualify if you're making a traditional claim, and that's the second column here. And then finally, the third column are things that will simply never be eligible. Preparation of user manuals, administrative changing, things like that. So I'm going to come back to my presentation, but encourage you to check out the CRA's guidance. And again, I'll circulate table 3 as a part of my presentation. Any questions so far? Project management field could be claimed. I think I kind of answered that. Does that make sense to you, Vanessa? Project management activities can be claimed, but the job description can't be claimed. Again, you saw how prioritizing work and assigning work that's a part of an SR&ED claim can be claimed. So we need to look at the actual activities and if they're in support of an SR&ED experiment. Again, it has to be driven from the experiment down to the people activities in order to be claimed. Hope that's okay. Let's share my screen again, back to our presentation.
So Vanessa Rodriguez, so she says, does that mean the title needs to be planning and not project management?
The title is the title of the activity should be on taken directly from that chart if you can, to be honest. But a job title isn't a great way to determine if someone qualifies for SR&ED. But sure, I mean, you're right that project management of a business project is not by default eligible. The project management activities that are linked to an SR&ED experiment are. I apologize, Vanessa, it's a little nuanced. It's like that category error again. The word project management is a little dirty, if I can say it that way, in the sense it's a bit dangerous to use that term. You're right to perceive that. You have to have working notes to determine why certain project management activities qualify in the end. And that's where time tracking becomes useful from an SR&ED perspective, because for people on the edges of eligibility, we assess them not based on their role, but based on what they actually do and how it's linked to claims we're making.
And so Vanessa says thank you. That answered her question. Sergio has a question. If the experimental aspects are not fully complete to answer a technological uncertainty within the claim period, can you still claim activities?
A tough one, Sergio. I really appreciate you're trying to understand these things, but the question is a bit of a flawed premise. So sorry to be intellectual. I think you likely do have an SR&ED eligibility. I think you should claim the activities, but you must complete answering the technological uncertainty section. You can't have any eligible work without at least a technological uncertainty. And we'll talk more about how to write technological uncertainties in part 2 of my presentation, but I'll help you a little bit right now to say, there's a famous thought experiment by some philosophers talking, and Donald Rumsfeld used this as justification to start a war in Iraq a while ago. It's called the 4 quadrants of knowledge, or Pascal squares, and it talks about knowing what you don't know, and knowing what you do know. And so if you draw a map of what you do know and what you don't know on a 2x2 matrix, there's a quadrant where you don't know what you don't know. So Sergio, technological uncertainty can't be justified by not knowing what you don't know in SR&ED for experimental development. That's the definition of scientific research. We do fundamental research about the universe because we don't know what we don't know. I'm sorry to be intellectual with you. A better way to write your uncertainty is say what you do know. Explain why available techniques don't work and any ambiguity that you are currently aware of. There's always things that everybody doesn't know. So writing about that isn't a good way to write a SREED report. Explain what you do know. Explain practically the steps you've already taken to try to learn the information and why that's not sufficient. So write from a first-person perspective of your journey so far and why you need to do more work to fill in the gaps. That links to other Latin concepts, but in general, don't try to use logic to justify an uncertainty. Try to use experience. Using logic to explain a technological uncertainty is dangerous and can be done properly, but I find it much easier for most of my clients to talk about their personal experiences of why it's hard or why they can't choose between option A and B without doing more experiments. It's a good question and a tough answer, I'm sorry, but we'll get there. The point is, if you're grappling with this, your work is very likely eligible. Is that okay, Sergio? So you're on the right track. If you know what you don't know, you're able to claim SR&ED. That's a technological uncertainty in most cases. I want to explain that for people on the phone, you are going to be writing an SR&ED report, and this is a sample of a report. We're going to walk through some technical writing later, but this is the essay answer that a company who was building software to back up computers wrote, talking about different types of compression. And the only takeaway from this slide is to give you perspective of how much you need to write in a technological uncertainty section. In general, what you'll see here are 3 paragraphs and some points. It's fairly technical, and it really is written by engineers for other engineers. And notably, this sample includes absolutely no reference to what the actual business of the company is. Now, you can include references, but that's not how an SR&ED claim is defined as eligible. The fact you make great accounting software has nothing to do with how great the AI is that's underneath it or how great the data processing is. You can tell me you write accounting software, but it just doesn't impact eligibility. And that's because the CRA has 5 questions it uses when it reads your reports. And I'm going to pause here to take a few questions that were asked. Does it mean project management is a field that could be claimed?
You had
Did I
previously.
answer that? Yeah,
You
okay,
had
sorry.
previously. Nope,
Thanks,
don't
maybe
worry.
I missed my, thanks for your help. So I'm gonna keep going to say, keep in mind that when you write an SR&ED claim, the CRA current guidance based on feedback from judges is that there's 5 questions they want to get an answer to. And this is an oversimplification of those 5 questions. So on the left, I have the 5 fields you'll write about in the T661 form that you have to file to claim SR&ED. Earlier, you saw an example of section 242. But I want you to understand initially that you're writing these sections to answer these questions. So the reviewer is trying to fill out a form that has these 5 questions on it. And again, Sergio, one question is, what are the technological uncertainties that cannot be solved using prior knowledge and experience? That's pretty explicit, so you got to answer that in section 242. So even though you might not know all the uncertainties yet, you have to at least explain some that can't be solved so far. And then we move on to 242, where you describe what you actually did in the year. They're looking in that section to find hypotheses aimed at reducing the uncertainty you described below. So if they can't find a hypothesis with a highlighter by reading your section 242, you haven't written it properly, because the CRA is trying to find a hypothesis in that section to say yes to your claim. They're also trying to find iterative steps taken and talk about success or failure, because again, your activities that qualify are analysis and experiments. So if you've written about what you've accomplished but not explained the process to get there, the iterative steps in your experiment, the test results and the modifications of your approach, if you haven't described the process, they can't validate that you've answered question 3. And finally, question 4, what is the technological advancement? That needs to be stated, much like the technological uncertainty. You have to know what that term means and state the answer. And then there's a really tricky 5th question. In reading your essay writing, does the CRA believe you have records that might corroborate the claim? This is funny. I want you to understand that if you talked about the performance was insufficient, period, and you put no numbers or percentages or qualifications or quantifications, it doesn't sound like you have documentation. Mm-hmm. If you only start your paragraphs by things like next and later, instead of month references, you're kind of telling the CRA you're too lazy to actually have an activity chart in front of you or have referred to dates. So I'm not saying you need day precision or decimal accuracy here, but there's a style of writing that conveys that you actually did things and had measured results that quantified success or failure in a scientific way. And you should remember that you're writing to answer these questions about hypotheses and experimental contexts. So you need actual data to impress them. I'm going to talk about why we do this for money, if that's okay, for a little bit. So remember, we talked about some different types of expense categories briefly, and I'm going to go into more detail here to say that generally speaking, we're claiming labor, materials, and subcontractor costs. The difference there is labor, you've issued a T4, subcontractors, you've paid an invoice. Fundamentally, if you have a per invoice or contract relationship, you have a subcontractor. Materials sit in the middle and are rather confusing. Generally speaking, what we can claim are materials consumed or that have become valueless because of the SR&ED. So you built a prototype that doesn't work, you can't sell that to a customer. That prototype and everything that went into it is a material expense, but really has no commercial value, and so it's valueless. I don't necessarily mean it's been destroyed. If it was destroyed, that's fine, but the valueless test is really about the thing as it exists today. And so a prototype could be transformed in the sense you brought parts and you put them together, you modified a circuit board in a way that makes it not saleable anymore, and so it's a part of the prototype. Or consumed means it's effectively valueless, and to some degree you could have both. You should always call something consumed if you can, because transformed materials could be disassembled and resold. That's sort of an important SR&ED concept. Now, when we talk about these things, I'm going to now switch to a worksheet and again pivot to another chart that I'm also going to share with you. So just a second while we share a different screen, and I'm going to provide an offer. I don't know if anybody wants to do this, but if someone wants to tell me how much money they think they spent on SR&ED, I'll try to estimate their claim for them now with this worksheet. Anybody brave enough to turn their microphone on and try to estimate how much their claim's worth?
Take advantage of it, folks.
To challenge people. If not, I'm going to make up a scenario that's hypothetical. So.
And that's okay too.
Okay, well, we'll start doing that. I'm going to say that across the top here, I've got categories: salary and wages, owner's compensation, materials, contract labor, capital costs. I'm going to say you spent $100,000 in salary. I'm going to say you spent $10,000 paying yourself a salary as the owner of a business. I'm going to say you spent, again, $10,000 in materials to keep things nice and steady, and another $100,000 in contract costs, and you bought $100,000 in equipment. And we're going to look at how these different costs are treated to get to an effective rate of return. I'm a big fan of keeping this math as simple as possible. I want to say this worksheet makes about 300 assumptions, so it should never really be used for filing an SR&ED claim, but it's really great at getting to the numbers on the bottom of the screen in green, which is the effective rate of return that I've quoted on these other slides. So let's walk through salary and wages for a second. $100,000 is a qualifying expenditure. We get something called the proxy on that effectively is an overhead amount to pick up all the costs of rent and equipment and electronics and hiring and firing and administrative duties the company has when it's trying to employ $100,000 worth of engineering or computer science talent. So what's amazing is this proxy can be capped, but it's an expense that you simply get a notional credit for. So if you have $100,000 of salary that you can track activities and months that add up to that, you get the 55% gross up for free. And we'll talk more about that later. So what it means is when we calculate the rates of return, the input is 155,000, not 100,000. And SR&ED is made up of 3 tax credits. The first one we calculate is the OITC. It's an 8% refundable tax credit offered by the Government of Ontario. And most people on the phone should be eligible for this tax credit. You can see the calculation there. I'm taking the 155, remember the salary plus this proxy increase, and then calculating it by 8%. That comes to 12,400. Starting to get a little tricky now for the people who like Excel sheets. That expenditure pool is reduced by the OITC credit, so we're taking 155, minusing 12,4, and getting 3.5 of the remaining balance. And we do that again with the federal tax credit. In this case, we take the 155, reduce the 2 provincial tax credits, then we get the federal 35% on the balance. In the end, we're getting $65,554 in tax credits from $100,000 of an input. And with rounding, that gets to the napkin math, 66% rate of return on $100,000. So for those who are on the phone, don't want to follow this worksheet, aren't interested or motivated in the nuances of the calculation, this green bar is the best case rate of return if you're a Canadian-controlled private company with taxable income under $500,000 and taxable capital under $15 million. And most of you on the phone will have less than $15 million in taxable capital and less than $500,000 of taxable income. To answer what those are requires a more nuanced interpretation, but it's safe to say if you're Canadian controlled, Canadian residents owning 50+1% of voting shares and the majority of board seats, the green bar is likely for you. There's 2 ways we can go on this worksheet. We can go across to other categories. Let's look at materials next. You'll see that there's no proxy amounts on the materials. It doesn't qualify for the proxy. And so the 10,000 flows directly. When I calculate the OITC, it's just 8% of 10,000. And now the math is really easy to follow. $800 is the OITC benefit. This is all SR&ED, everybody. So materials at 42%. We get to 42% of total tax credits from the $10,000 generating $4,229 in material costs. You'll see contractors are much less. There's some special rules that limit how much contract costs qualify. They're a little complicated, but for today's call, you can see it drops to 34% instead of 66. So for many of you on the phone who thought you were saving money by keeping your developers on contract terms, if they're Canadian contractors, you might want to reevaluate that decision. It's important for you to note that specifically, we're talking about Canadian developers and contract labor. US or foreign contracts generally don't qualify in this category. Good question. Yeah. Go ahead, Bridget. Do you want to read it for me for a second?
Yeah, I can read it for you. So from Vanessa, how does the owner expenditure get calculated? I mean, is it expenses for their time on the particular project?
Sure is. All this is expenses. In the end, what we're going to calculate here are the number of hours you've spent on a project and your hourly rate. So the actual worksheet we use to do the calculations are all based on number of hours and hourly rate. If you want to keep it simple, take your total T4 compensation as an owner and take a percentage of that is another way for you to do the calculation. But you'll see there's a big change. So I'm going to change the sheet a bit now. I'm going to make the salary and wages match perfectly the owner compensation. And you'll see that there's a difference right here in these numbers. The proxy amounts that are earned by an owner, and that's in this case a specified employee who owns 10% or more of a company, are capped at a different rate. They can't exceed a 75% threshold. The threshold may not apply to you, and there's a secondary cap if you make more than around $260,000. That doesn't qualify for proxy. We should all be so lucky as to make 5 times pensionable earnings. So there's some complex caps, and this is a good example of, not to be a salesman, but why you might hire a professional to do this calculation for you. This sheet's a gross oversimplification, but what you need to know is the effective rate of return for an owner's salary is less than for employees. Capital cost, yeah, it is not recognized by SR&ED. That's another question, sorry. Capital costs, you see I've got here, it's a trap on the far right-hand side. It was eliminated from the program effectively a few years ago, and we can no longer go back far enough to claim capital costs. And so this is worse than some people on the phone may realize, and I want to talk about it. And I'll say where there's weasel room in this worksheet and categorizations. And weasel room, I mean, be cautious. You could try to spin things into the materials category from the capital category. And I'm gonna give you some advice on that now. Traditionally, capital costs are assets, and there's an accounting tradition that anything over a dollar amount is a capital item, and anything under a dollar amount is an expense. And that convention does not apply in SR&ED. So there's no dollar test to say if something's capital or material. So be careful about using some accounting conventions here. If you have a thing that can help you earn revenue over multiple years, it's capital. So equipment like a drill, a rack, a fixture, a furnishing is a capital item because you can use it next year. If you can't use it next year, it might be a material. Or if you've modified that drill, it could be a material that's been consumed or transformed. Again, so if we're thinking of a drill, just to be clear, I mean a mechanical thing that applies screws into walls, that type of drill, is traditionally equipment, even though it might only be worth $40 at Home Depot. So be cautious. It's technically a capital item unless it's been modified, because it can earn revenue in future years. It's an asset the company maintains, even if it chooses not to track it. We see a lot of errors in this calculation. We see people pushing things through material expenses they shouldn't. And the CRA doesn't like it. I don't encourage you to do that. It's not worth jeopardizing the huge amounts of qualifying salary to try to get a $40 bill drill included in your claim would be my advice. But having said that, for those who want the advanced course, material costs are extremely exciting for those who are into nuance. Technically, the material items you're claiming is based on a laid down cost, which means if you have a steel plate that needs a hole drilled into it, and you purchase a steel plate with a hole drilled into it at a premium cost, then effectively you've captured some of the costs for not only a person to drill the hole, but also for the drill, because you're paying the premium to get a steel plate with a hole drill into it on your shop floor ready to use in your experiment. That makes sense to everybody? So technically materials include some labor costs because someone took a raw material and prepared it. And so depending on how you're purchasing things, we can even include shipping to get materials in a state ready for use in your experiments on the shop floor. And so again, that I think requires expert advice, or you should refer to CRA guidance, or just call the CRA for a pre-claim evaluation if you think you're claiming aggressively in large amounts of materials in the way I just described. It can get pretty tricky. Hope that's helpful for people who aren't in software. In software, we don't see AWS fees being claimed as either materials or capital costs. And if you were going to try, I would put it as materials, but I'd recommend you don't try. Just to go there really quickly before a question comes in. I want to show you one other thing on this Excel worksheet, which again, I'm happy to share, but I want to caution you, this sheet is very dangerous with many assumptions. The actual worksheet is extremely complex in comparison. There are other ways you can earn less money. So Apple, let's say, or Microsoft or Samsung, when they come to Canada and claim SR&ED tax credits, they don't get 66% back on their salary dollars. They're an other corporation with taxable income or capital exceeding the thresholds, so they enjoy lower rates of return. You need to be aware that foreign ownership or linkage with large associations through tax association rules could compromise your SR&ED rates of return. So this worksheet lays out 3 scenarios where you'll see the rate of return on a salary dollar drops from 66 to 38 to 28%. One other word of warning, the vast majority of my clients do not claim the ORDTC tax credit. And that's because this is a non-refundable tax credit and they're in a loss position. And if you followed the math of how the federal credit's calculated, if you claim these $500, $499 of non-refundable credits, it reduces how much you're getting back for the federal credit. So instead of getting $4,816, I always tell them, waive the ORDTC because a non-refundable tax credit, although it carries forward at least 20 years, will offset taxes you'd pay in Ontario. You shouldn't be worried about future taxes. You should be worried about cash in the door today. This is a case-by-case decision to be made, but for the vast majority of my clients, I don't claim ORDTC. And so this 62% number, again, you've heard me say this before, is the cash gross refund amount. So you could get a check in a best case scenario of 62% of qualifying salary dollars back from the SR&ED program. There's other reasons why that's a misleading number, but we start to get into edge cases like SR&ED is included in the income. So if you're profitable, you're going to pay corporate tax on the 62% or on the 6,231. Other things like that tend to happen in the SR&ED program that get the complexity beyond the scope of a presentation like we have today. So I'm going to stop my sharing. It's a good chance for another human break. Bridget, if that's okay. And I encourage people to think about questions before I come back in 30 seconds, and we're going to move on to more advanced technical writing aspects next in the presentation.
Absolutely. Perfect.
Okay.
Thanks, Rick. And during that time, if people are just sitting around, feel free, as I requested a little earlier, if you have any suggestions for topics you'd like to see in the coming months, let us know in the chat. I'm working on a number of sessions, but I'm always looking to add more to make sure we answer your pain points, your issues, and that we're giving you highly relevant information to help you in these uncertain times. So please feel free to either put them in the chat or reach out afterwards. I'm always happy to hear from you, especially in these virtual times. It's nice to connect. So please, by all means, don't hesitate. Jennifer and I, who work in events, are really looking to ramp things up for you. So yeah, please weigh in if you can. And take a bio break. Go refill your coffee. I know I keep talking whenever he goes on break, but that shouldn't stop you from getting another coffee. And we are back.
Thanks, everybody.
And we have a question right off the bat.
Good.
Do you want me to read it out for you?
I feel like I'm actually getting some value for my time here if people are asking questions. So please keep doing that. It's more rewarding as a presenter. What does Rick think about third-party consultants that offer to prepare SR&ED submissions that are paid on a contingency basis? Not so much the financial work, but preparing the text submissions. Are the people really useful? A good question. I'm going to answer it in a couple of ways. First, I'm one of those people. That's what that's how I make some of my money. So you got to understand who's answering your question first. I'm going to answer it in a couple of ways. So let's say first that you don't want to work with a consultant. The CRA has a great program. So previously they would even visit you in person to do something called a pre-claim review or consult process. And when you file your first claim, they traditionally did a first-time claimant advisory service to give you advice on what you should change for next year. And so those were both really interesting services, but in these cases, they somewhat jeopardized your first claim. So you could make the university mistake by describing things in the wrong way. Now, I've trained you to try to prevent that today, but you could make a mistake by using words in suboptimal ways that would jeopardize your claim and build a risk profile with the CRA. If you left out answers to questions they need to see, it might delay when you get money. And so the value of a third-party consultant is to first, do no harm, and second, improve or expedite the processing of your claim. We can't change your work, but we can absolutely help you by avoiding mistakes that would otherwise inhibit the rapid assessment of your claim. So let's talk more about consultants like myself. I think I made my first claim in 1997 for myself. People who want to do the math, that was a long time ago. And so informally, I was profiled by the CRA. I know the reviewers on a first name basis. And then to prevent some fraud issues that occurred with the program in, I'll say 6 to 10 years ago, where some consultants were filing descriptions of work that weren't perhaps very representative of the business's activities, they started profiling preparers explicitly. So if I prepare a claim, my name and my company name goes on it, and that becomes a part of the assessments that CRA makes. They use that data to keep track of how compliant my claims are and the success risk. So because of that mechanism, most consultants today have a hard time operating a business doing SR&ED if they don't have some legitimacy. I'll say it that way, as with very limited praise. Every company will have a different risk context, but keep in mind the CRA profiles every preparer because you have to disclose that on Part 9 of the form. And I think that was as of 2014, that disclosure became mandatory. So if you work with someone and don't disclose it, you're subject to fines and penalties. So there is disclosure required. You don't have to disclose my involvement for going to this training session. It's if I prepare parts of the form for you that my involvement has to be disclosed. 70% of the claimants work with professionals. So that means Part 9 is filled out 70% of the time. So the other 30 just go to a session like this or choose to internalize the skill set required to prepare SR&ED claims. So 70% of all people of that 20,000, the 23,000 I talked about, end up hiring someone to help with SR&ED because it is rather complex. That doesn't mean you shouldn't take some ownership of it. And regarding contingent fees, I think 80% of my business is also on contingency, but I do also work on an hourly basis. So, if you want to try to draft a claim and want me to edit it, that's negotiable and possible that you could simply borrow time for a number of hours, and we could work from there. So I don't think there's anything wrong with contingency basis, in part because of the CRA's controls on the industry in general. Speaking of disclosures, the screen I have up now is also new to the T661 form. So not only do you have to explicitly say who helped you prepare it, but you have to say what evidence you have to corroborate your claim. And although I talked about writing about evidence in line in your work, you also have to check these checkboxes. So for those on the call, please take a look at this form and think, with your current business, how many of these can you check? So I've put some highlighting around ones that you might be able to check. But I'll also make another reference to Weasel Room. There's a great book called Eats, Shoots, and Leaves that talks about a panda going into a bar. And it either eats a meal and then shoots the waiter and walks out of the restaurant, or it sits down and eats, bamboo, shoots, and leaves, depending on how you punctuate a sentence. It's a funny joke for those who were muted. I just didn't hear you laughing, maybe. But so Eats, Shoots, and Leaves is an interesting book. I do kind of recommend it about grammar. And if you look at this checklist, it's subject to the Eats, Shoots, and Leaves problem, because 271 says records of resources allocated to the project, comma, timesheets. So what do you think that comma means? Do you think that means or do you think that comma means and, or more specifically, timesheets? And many claimants have chosen to interpret that comma as or. And as a business, BDO interprets the commas on the sheet as or. So a little bit of funny here. We're not trying to punctuate here, and again, it's a good lesson in ambiguity. So if you have records of resources allocated to the project because people are assigned to user stories in Jira, again, or you have a project planning document that links people to activities and months, I would check 271 even though you don't have timesheets. Similarly, if you had a project plan, you would check 270 for project planning documents. If I used a tool like Jira or Trello, I would check 273, even though that's not a laboratory notebook, because I do think it's a project record. I'm interpreting commas as ors. You can talk to the CRA about this. I've gotten a diverse number of answers, mostly shrugs, when I work with the officials who administer the program on how to interpret this worksheet. But I'll encourage you, more evidence is better. And obviously there's some loaded questions here. Look at 277, everybody. Test protocols, test data, analysis of test results and conclusions. I got to tell you, if you're claiming that you're doing experimental development or scientific research and you don't have test data or analysis of results, you're really telling the CRA a lot if you skip this checkbox. So, I'd say that some of these are sort of important to conveying to the CRA you're doing experimentation and analysis. So I would encourage you strongly to have some kind of test data or analysis of test results written down in documents and be able to check 277 in addition to many other things on this worksheet.
Now, Rick, we have a couple of questions in the Q&A.
Great.
I believe you answered the first one from Vanessa. So what happens if there is no timesheet for the owner's time? So you've touched on this, but you can go deeper.
Yeah.
Ing is asking, that's a great checklist, kind of like a rubric. I find many companies hate to document their SRED eligible experiments in appropriate write-ups. Supporting material and hours logs are essential, especially in audits.
Yeah.
So good point.
Yeah, eligibility is always gray, because if you lock two engineers in a room and tell them to come up with the right solution to a problem, they'll probably fight for about 80% of the time.
My dad's an engineer.
Yeah, and be begrudgingly compromise in the end. So I'll say, keep in mind that the way we resolve, questions between two engineers, was this hard or not? Is this a technological uncertainty? Where the CRA has a scientific expert that's in a room arguing with your scientific expert about whether this is a technological uncertainty or not, because these are potentially contentious claims you're making, is evidence. And so, I got to stress that you win arguments with the CRA with evidence, not by yelling louder. They're people first, and they're professionals second. They do this for a living. They're trying to help you succeed, and what they need from you is evidence they can bring to their boss to say, I'm approving the claim because of this. And when there's ambiguity and their boss is giving them a hard time for approving your claim when it doesn't sound great, evidence is going to make the difference. And I'm not talking about ineligibility. I'm saying in ambiguity, evidence makes the difference. And so you should feel empowered by evidence, and I'd encourage everybody to have some. You usually have more than you think. Long stories about evidence, but I want to say that a receipt, let's say that I bought one of you a lunch and I tried to expense it for work. When I go to file that expense, My receipt says very little about what we discussed at lunch, really nothing. It doesn't even have your name on it, but that receipt is evidence of a business lunch. And so it's interpreted in the context of a project and a claim made. So I'm claiming it's a business lunch. So the fact the receipt has food for 2 people, occurred at 12:13 in Hamilton, makes sense that we met at Innovation Factory and we had lunch and it was 2 of us, and it's plausible that that receipt from lunch, if we sat down together, is a business expense. But that's only made indirectly and through correlation. So a lot of evidence is like that. I would rather have direct evidence that's better than a receipt from a meal, but at least a receipt from a meal can be interpreted in a context to prove that something happened. A good example is if you bought a special material to run a test, at least the invoice of you buying that material corroborates the fact the test happened because it was a special material. I would rather you have test results, but at least that invoice tells a part of the story. But I'd encourage you to do better. Now that you know what an SR&ED project is, try to actually document the SR&ED project and have your project plans written in the right context. There is some incremental cost. The CRA also has its word, they like to say contemporaneous documentation. They don't like you writing it after the fact. They like you to know what SR&ED is while you're doing it and document in that context as much as possible. Traditionally, everybody, we had the filing timelines to deal with. This is a part of your SR&ED return. I'm going to get to the technical writing. I realized I had a few more slides to do. But you claim activities within a year in that year's tax return, and there's preferential treatment if you file it within 6 months, and then you get the assessment within about 4 months after that. Again, those timelines are different now, not the filing timeline, but the assessment timeline. And if you're amending a return that you've already filed, an old tax return, you technically have up to 18 months to go back to a year and then claim the expenses in that year. If you amend within that 18-month deadline, then the assessment period is typically 8 months to a year. It takes them far longer to get you a check. And so we always avoid amendments as practitioners. If you're a company that's operated for 3 years and never filed a claim, we'll do 1 amendment in 1 current year, but we'd never want to do another amendment to file within 18 months of a fiscal year end. I think that might be it. I'm going to skip some of these review timelines and go from there, and I'm going to switch to the writing presentation. Go ahead, Bridget, if there's questions.
Hey, yeah, if there are any questions, we've got about 2 minutes left to the session, but
then we won't do too many writing things.
That's okay. We can go over by a few minutes if people want to stick around. If you can't, just know that it will be available. But yes, we want to mind your time. So
I'm going to expedite then. Yeah, sorry to interrupt you.
No,
we're going to do a Coles Notes version of technical writing here, everybody. Then
go for it, Rick.
Okay. Just a second, team.
This has been a great group. We thank you for your patience.
All right. So a couple of lessons here. For the claimant, this is a tax form. It's a tool for me. I'm an expert writer and an interviewer, assessor. And for the CRA who reads these claims, this is like an X-ray machine. They get to peer inside of your body and decide if there's anything wrong with you. And I want you to think of it that way. Everything you write can and will be used against you to assess risk. And I don't mean to be negative, but you're disclosing information and the government is interpreting that information to decide who gets the money or not. And unfortunately for many people, the most cost-effective way to review the program is by assigning demerit points, not by assigning merit points. So understand the reviewers read descriptions with a highlighter in their hand, and every time they use the highlighter, you lose points. And those points are measured in dollars, and dollars justify an audit. An audit means months or weeks of your time arguing with their reviewers about whether your work is eligible. So report content can and will be used against you. Read it like this: techie stuff, commercial, bad, highlighted. Techie stuff, techie stuff, techie stuff, easy, bad. Techie stuff, routine, bad. Techie stuff, business, bad. Techie stuff, minor, bad. Does that make sense, everybody? So I want to be cautious. Defensive writing is what I'm asking you to do when you're writing your own SR&ED claims. Be transparent, be honest, but don't talk about your business. Accounting software is not eligible. Keep that lesson in mind. You have to organize your writing in ways the CRA wants to use, write defensively, use visual cues and be concise. Bullets are great. The formatting will get dropped, but they still can convey. White space still means things. If you file 1,200 words with no paragraphs, you're kind of asking for, you're sending a message to the CRA with your writing style, and it's not always a good one. So a well-structured report lets them read and assess it quickly. There is a guide to the T661. I've got it here on the screen. I've highlighted keywords. They're looking for certain things, and they do have a checklist in mind. Remember, they're highlighting errors, but there is a little bit of minimally compliant context they're looking for, and their guide tells you what that information is. So for people who are trying to prepare it by themselves, you need to read the guide to the T661 or you won't get this credit. You can't naively fill this form in by describing your business. Just in the guide to section 242, you can see how much red I've highlighted here. This is to be answered in 50 lines or less of 80 characters. So you've got to address every red point in that amount of space. And if you don't address the points, you're in trouble. And if you include ineligible work, you're in trouble. Not trying to scare or intimidate you, but this is a reason why many professionals are involved in the preparation of claims, because it is a fairly substantial task. I'm going to go on, really quickly to say that in writing uncertainties, keep in mind that the CRA wants to be able to verify everything you're saying. And so there's always gray area, but as much as you can do to cite literature or cite prior work, you'll seem more legitimate. And so I always encourage you to state what's certain when you're describing uncertainties. This is a little bit related to Sergio's question and that matrix I referred to. State what you do know based on what you've done. State why you're experts at doing this and why you're still struggling. Set the perspective of what you're trying to achieve and what a failure looks like. You're uncertain because of a feeling you have as a technical professional. If you're the CFO on this call, you can't be the one writing this section. It needs to be the technical professional who's describing their personal uncertainty about the best way to proceed from this point forward because of what they have done. So this 242 section is the most important one. You're trying to persuade your audience that your conclusion is accurate. I think I might leave it there. There's some other techniques we'll circulate later, but clarity, conciseness, correctness, review your own work, and remember it's humans reading it in the end. They want to hear a technology story so they can approve your claim. Thanks, Bridget. I'm going to pull the plug there.
Yes, that's all right. Okay,
we can do a version 2 if we need to, but I'll take questions now.
Yeah, okay, so we've got one from Francis. So it is, if we were spending money on another government research program, for instance, supporting a MyTax fellow, is this SREED eligible? Is it as salary or consultant? Sorry.
Good question. I'm going to share my screen in a different way. We're going to model how eligible that is live. So Francis, you're the big winner for the actual SREED modeling example here.
Yeah, and thank you to those who have stayed with us for these extra minutes, just answering your questions.
Francis, you probably paid $15,000 for that MyTax person. They probably worked with you for 4 months just to help other people on the line appreciate this. So I'm entering $15,000 in the wages and assistance, wage, salary, and wages section here. You can see that generates a return of $9,347, except although you paid $15,000, you also received $15,000 of assistance because MyTax paid that same person a matching amount of $15,000. You contributed $15,000, the MyTax program paid $15,000, they got $30,000 for the 4 months they worked for you. That means I have to disclose $15,000 of assistance to reduce the eligible expenditure pool. So this is crazy math, conceptually hard for people to understand, but I'm adding the $15,000 you paid, because it is a T4 salary, which is required by the MyTax program, so it absolutely is salary and wages. Or absolutely, or if not, you might have to do some restatements there. I can help you with as well. It should be salary and wages. You should have issued a T4 for that. You're going to get the proxy gross up, that magical notional amount of overhead you get to claim if you have qualifying salary or wages. Because of that, the 15,000 plus the 8,250 minus the 15,000 still leaves you with a positive number. That means even though you got MyTax to pick up half the person's salary, if they did SR&ED, which most MyTax placements do, you're going to get another 3,317.
Nice.
Hopefully that makes sense, but it's a good example. I'm glad you asked it, because in the time we had today, I didn't get a chance to talk about government assistance and how programs interact. If you have IRAP, for example, or other funding programs, they are treated the same way. The assistance is matched to the hours people spend.
Great. Does that answer your question, Francis? I think so.
I think so, yeah. And it's a great lesson for everybody on the phone. Get as much money as you can, as soon as you can. Even if you work with a professional, SR&ED is in a certain program. Although I tend to recover a high 90% amounts of the dollars I ask for, there are some of my clients who don't get everything they ask for despite all of my help. MyTax is a certainty once you're approved, like other programs, IRAP and others. See them as a synergy. Get that money and also claim SR&ED. Doesn't matter if the money goes to a university. Another good question. So I'm going to model money going to a university is treated as a contract payment. So there's something called a third-party payment, or a contract with an eligible research institution, can be modeled as contract labor. And so this is depending on the specifics of your MyTax program. There are different MyTax programs. It could also be modeled like this. Effectively, your rate of return is a bit different. In this case, you're getting 4,824 if you paid money to a researcher to do SR&ED on your behalf. Remember, the actual activity has to qualify. You can't just donate money to a university. There's different tax credits for that. We can help you with. If you do, by the way, we should talk, but that's a different session. And today's session, if you are paying university labs to do work for you, it flows through as a third-party payment or a contract amount. Financial calculations are the same, 32% rates of return.
Excellent.
Okay.
Excellent. Any more questions? Okay. Okay, so I don't see any questions coming through. So I'd like to thank everybody who submitted questions through the chat and the Q&A. You've made this a really interactive session, and we really appreciate it, and hope you got lots of value out of it. I'd like to thank Rick for joining us today on this session. Super awesome presentation, honestly. I think this is so valuable. There's so much content here to digest, so we're really glad that you could help our clients and community members at this time.
Thanks, Bridget.
Yeah, and I'll be in touch for future sessions.
Okay. I wish you all the best and encourage you to reconsider those COVID programs if you qualify. It's a short-term opportunity. SR&ED is too, but there's more out there that requires action this week and next week. So.
Yeah. And thank you all for attending. Thank you, Ing. I saw your note there. Yes, thank you all again. Again, I'll be connecting with Rick to get this material up on our page so that you can have these resources available when you need them. So thanks again, everybody. Oh, thank you. I keep seeing, okay, everybody's saying thank you. Okay, great, great, great. Wonderful. Thank you, everybody. Have a great rest of the day, and feel free to connect with Innovation Factory and BDO as needed.
And thanks for your help, Bridget.
Oh,
together this looks semi-professional, if I can say it that way.
Yeah.
Okay. Bye, everybody.
We do okay. We do okay. All right. Thanks again, everybody. Have a great day. Take care. Thank you.